Are you looking to get a funded trading account? I know nowadays there are a lot of options for you. But here at Trader Funding Program, we do things a little bit differently. Plus, we're run by a group of traders that have decades of experience on trading desks and trading floors from around the globe. And we have a simple set of guidelines for you to follow with no hidden rules. And plus, we give you tools to help you become successful, like using ForexAnalytix, like being in a community of traders where you get to talk to people like me and other ForexAnalytix analysts all throughout the day. If you take an assessment during the month of July 2024, you're going to get a one-on-one consultation with me, Blake Morrow, President of ForexAnalytix. So join us today. I look forward to speaking with you soon.
Good morning, boys and girls. Welcome to the Flow Show as we kick off a new week, Monday, 8th of July. Not sure how much busy we're going to be this week. A bit shorter data, but we do have some important bits and bobs getting coming up. So we'll have a look at those in a little bit later. Morning, Kay. How you doing, sir?
Morning, Ryan. Morning, everybody. Yeah, doing all right, mate. Doing all right. That weekend went far too quickly again. Yeah, here we are again. And we are ready to go. It's going to be a slow start, I reckon, today, unless something happens on the political front. Not only in France, but Rachel Reeves is about to start giving her testimony as well, no?
Yeah. Well, we're going to hear some grand plans, no doubt, from her. No interest in even what she's got to say or any other political at the moment. I'm sick to death of it. Too much politics going on in the world. Right, well, let's get through what we've got, and I'll keep an eye on the headlines to see if she spouts anything that's market worthy. Right, going to kick off. Not a lot happening in China at the moment, so we'll go straight to Japan, and we've had some wage data, income data coming out. Looking okay on the labour cash earnings, up 1.9%, but missing expectations of rising to 2.1%, going the right way. That's all good. Overtime pay as well, stepping up 2.3% year on year in May as well. However, real cash earnings fell back. They were down 1.4%, were expected unchanged at minus 1.2%. So real earnings coming down lower, even while we've seen these other earnings going higher. Obviously, inflation doing its thing there, offsetting against those wage gains and income gains. Hence why Kishida and Co. want these wage gains to continue, so they turn real earnings into a positive rather than a negative. But as we know, it's a big old slow process. Japan's Chief Cabinet Secretary Hayashi says we're keeping a close watch on future wage trends. We've also had the Japanese Economy Watchers survey, the outlet index rising to 47.9 from 46.3. I don't think that's on any calendars of note. Nope. We've also had some reporting from the BOJ via that survey, via some of the other branches. BOJ say other regions saw companies flagging the impact of rising costs from the recent yen falls. And the BOJ Osaka branch manager said there are both positive and negative views voiced by firms on the impact of a weak yen and subsequent rise in prices. So as usual, a currency moving has positive and negative effects, and it's just what balance those effects fall on, whether they're the positive side or the negative side, that will get the BOJ maybe changing policy or the MOF intervening again. But as you see, a bit of a mixed view on that lot. Over at the S&P, Jordan says interest rates are the main policy tool, and we're also ready for further Forex interventions. Speaking in the newspaper, it says he's relatively comfortable with Swiss inflation. Over at the ECB, Stornoas says we might have 1 or 2 more interest rate cuts this year, clear as mud. Those green shoots have taken a further pasting this morning. We've had the Eurozone Centix index out, coming in at -7 from a prior +3. So that's not looking too good on that front either. As you can see there, was expected to drop back only to -0.6, but came in -7.3. So another kick in the teeth for those green shoots. Kate, anything you want to talk about in those morning comments and overnight comments?
Well, I mean, the one other data point was that the German trade balance looks good on the headline, but the activity indicators are very bad. Both exports and imports came down, so that's another one which is not really great. Going into the summer, not sure whether Germany will really stand up so quickly. All those little green shoots have been stamped down. In other news, no, apart from the Frenchies.
I meant just in that stuff. Anything comments on Japan and stuff? I'll go through the other bits and bobs in a moment.
No, not really. Just that a bit surprising that the real wages index remains so low. If you look inflation compared to the wages. That's a bit of a surprising number. I find it should come at least closer to the 0 point. When you see what they got as an increase. I don't know.
Yeah.
Perhaps it will come with some delay.
Yeah, these cash earnings, is that separate, something separate to actual wages, like monthly wages or something like that?
Well, I guess in the monthly wages, there might not be the bonuses included also, or in like the other one. Perhaps the bonuses are not included in there because they have like 2 yearly bonuses incoming as well. But that's usually a fixed amount. So I'm not sure why they don't take it up in those numbers if they wouldn't. But it looks to me like they are not in there.
Yeah. So it may be a little bit of skewness going on those numbers, but they are what they are, and we have to deal with them. And until those real wages turn positive, it's still a big old task for those in Japan. Right. Moving on, we'll go over just some of the other stuff before I get to the French election stuff and everything else that's gone on this morning. So jobs last week from the US. Now we're getting a lot of people painting this as a soft number, a negative set of numbers. Goldie's one of those, saying that they saw that as being a soft release of data. You can pick holes in it. If this data dropped 2-3 months ago, no one would have batted an eye about it. But because the market is looking for any excuse really to jump all over any softness in US data, it's done so. So firstly, the headline: beat expectations, 206k, still a healthy number. Okay. The prior got revised down to 218 from 217, which has been seen as a bit of a negative. But if memory serves, pretty much nearly every NFP has been revised down by one shape or form for many months previously. Still, even at 218k, it's still a positive number. So there's nothing in these headline numbers that should be shaking any trees. The unemployment rate rose to 4.1%. Was expected unchanged at 4%. Again, no big deal. 4.1%, that's still good. There's countries out there who die for that sort of number. And part of that rise in unemployment likely due to the participation rate going up as expected. So again, that doesn't make it altogether a bad number. Start getting higher unemployment when you're seeing negative jobs growth. That's a different thing altogether. Okay, this could quite easily pull back to 4% or better next month, as it can go to 4.2%. And the participation rate coming higher means that there's more people coming and looking for jobs, which is not necessarily a bad thing. Wages, they pulled back to 3.9%. Okay, dropped 2 pips, came in as expected. Still, we've been around this 4% mark for months and months and months. So again, nothing really negative from there. Take it what you will. We saw the dollar having a little bit of a sell-off at the start. It's recovered since, and then it's dipped a bit, and it's real pretty much round about where we started in a few pairs. Kay, what did you make of it? The market, as I said, trying to find any excuse really, but can they find any excuse out of this data?
Well, I think, as I said, the unemployment rate ticking up is probably what did it. If you look at the headline number, you look at the revisions, it's more or less neutral still. But I do kind of agree in the global scheme of things with how the market reacted to it. Not particularly well. I mean, if you look at metals and stuff, they went harder than Forex, than FX really. So but I do kind of agree, because in the global scheme of things, the data are starting to kind of show those flags, and I think if wages come down and the unemployment rate, we have to take it for what it is. I kind of agree with the initial reaction, at least. And now we will see. And it's no use to fight it either. We saw the bond yields coming down a little bit, but it's still, how shall I say, not those kind of data. And I've been repeating that very, very often. There's going to be a very big distinction to be made between a gentle slowdown, which some of these data could show us, because the private non-payrolls non-farm payrolls were less than expected as well. But we need to make a distinction between a soft patch or softer data and the world falling apart. These are not data that show that the world is falling apart, but it is all to be seen in the context of, were those dots correct? Was the market also correct to reprice for only one cut? And there, I think, is to me at least, the big discussion is going to come. Is September on the cards? Because that would mean, and actually the market already started to reprice it. That would mean a bit of repricing to be done that was forced by those prior dots in the FOMC. So I think there is where the moves may have emanated from, and in that respect, I agree. I completely agree with the moves that have happened.
Yeah. I mean, personally, those numbers don't indicate that the Fed should be cutting anytime soon. Not negative enough, in my opinion, and based on what the Fed said as well. They said a couple of tenths up on unemployment rate isn't going to shake any trees or get any of them worried.
That's not what Powell said in Sintra. That was the line that changed stuff in Sintra. That was the line. He said, I wouldn't like it if it would start to tick up, and that, I think, was heard by the markets. So the line about a couple of tenths here or there that won't matter much, that was before. In Sintra, he was talking differently, and that's where the market also started to listen to him in Sintra and say, like, well, perhaps things are changing a little bit. He didn't say that they were more confident or so, but I mean, that was a change, that line. That was a clear change.
No, I get that, but I still don't think this data falls into that category, not by a long way, shape or form. As I'm saying, we've seen these numbers before. We've been around, take the unemployment rate, we've been around this 4% mark for quite some time. Yeah, it has been creeping more higher than not, but the speed of it is just, if it goes from 4.1 to 4.5 to 5%, that's a different kettle of fish. But going a pip every month, it's going to, take you 10 months before we get to 4.5%. If you take the trend that it's been gaining. But anyway, we shall wait and see. But the market has, or Fed swaps have did fully reprice to rate cuts by the end of the year after all that data on Friday. So maybe they are getting the message. We also had a Timmy Leaks piece out from Nick Timiraeus at the Wall Street Journal saying that September might be a consideration now after this data. I guess overall, it's really a case of how desperate they want to cut rates as opposed to how they sense the data or how they read the data. Is this data, in fact, going to be good enough for them to cut rates? Who knows? We might find out later this week because Powell has his semi-annual testimony to both houses, or both banking committees, shall we say. So we've already had the monetary policy report out on Friday, which I dropped in the newsroom this morning. We'll get the text of his testimony a couple of hours before his actual appearance. It's usually just a rinse and repeat of the last FOMC, but the market likes to look at the lines in case there's something in there changed from that FOMC. So that's coming later this week. We'll look at that in a moment. Canada, they had their jobs numbers out, and a bit of a wonky one. Employment was expected to rise another 27,000. It came in down 1.4 thousand. Full-time employment doing most of the bad work there. Part-time actually rose a bit to offset that. A bit of a negative here because Canada's unemployment rate rose to 6.4%, was only expected to go up to 6.3%, and that came as the participation rate came down. So that's a double negative. So the unemployment rate went up even as people came out of the market. So that was a double negative. However, the thorn in the side for the Bank of Canada was its wage number rising to 5.6% from 5.2%. So they've got a potentially softer jobs market, which had been going okay for the last few months, and matching that off with higher wages. So that's not a good cocktail for the BOC if they want to cut further. Do they act on the inflation side or do they act on the slowing economy side? The old rock and a hard place for those guys as well. They did get a bit of a boost, though, from the Ivy PMI, which is a bit of a wobbly number at the best of times. That jumped up into the 60s, depending on which one you want to look at, the non-seasonally adjusted or the seasonally adjusted one. Was expected to only tick up 1 point to 53, came in at 62.5. So that was a decent number for those guys. Feds Williams, he was out saying there's still some way to go to reach 2% inflation target on a sustained basis. Did say, though, that we have seen significant progress in bringing inflation back towards a 2% target. So he's not been quite ready to hit the cut button just yet. Right. These bloody French elections. So a bit of a shocker in the end, because the far right party that led in the first round was expected to do just as well in the second round. Didn't. They actually came third. In a surprise move, this new left alliance thing actually topped the polls at 182. Macron came in second with expected seats of 163, and the RN Le Pen's lot coming in with expected seats of 143. Now, it's all a numbers game at the moment. So if you take all those, and they're pretty much the final numbers, add all those together, they come up at 488. Now, the total seats in Parliament is 577. So that leaves 89 seats left over. So even with the MPF taking the most seats of 182, even if they managed to cobble together some coalitions from the other 89 leftovers, that still wouldn't give them a majority. That and the fact that they've ruled out working with Macron in a coalition. The RN party have ruled out working with anyone that's not right in a coalition. So no one, mathematically, it seems at the moment, is going to get a majority if they try and go for some of those other 89 extras, shall we say, or independents and smaller party seats. So we're in hung parliament situation at the moment. The market isn't looking overly bothered about it right now. We saw the euro coming off 30 odd pips on the open yesterday, got down to 108.02. We've bounced back since then up to 108.43. France assets, we've seen those French-German spreads narrow a bit, nothing major. The CAC opened down, it's gained back since. So it seems the market is giving it a big fat bothered at the moment. This is going to probably move more into a French problem than a euro problem moving forward, unless there's blocks put on certain policies that are trying to be put through Europe. But we're into that situation, as I mentioned last week. We have the short-term impact of the result, and then we have the longer term, what comes next, what happens with government, what happens with policy. And that is looking like it's probably going to be a bit of a mess for the foreseeable future. So we just have to watch that impact on French assets and euro, dollar, whatever euro currency you want to look at. But I think, Kay, the FX impact is going to be minimal from here on out, unless there's some big, jaw-dropping news.
Well, it's all going to take time. I think the market got a bit was scratching its head, or is still scratching its head right now on what's going to happen, because that was not really part of the plan that those left parties would top the charts. And actually, Macron didn't do as bad as it may have been expected. So I think the market is really wondering what's next, and the impact may only be seen in a while as well. When who will it be that he has to trade with? Because he's still the president after all. So he's going to try and form some kind of a government. It's a lame duck government, which is very high risk right now. It's probably, as you say, going to impact France. The issue is, though, what's it going to do later on? Once the situation is like relatively clear in France, there's still this is still the uncertainty about who is going to sit in the European Parliament as well, right? After this second round. So I think we haven't seen the full impact of it all yet, whether it's positive or negative. And right now, I think it's just a question of sit back, wait, see what Macron can or can't do, see how hard Mélenchon is going to push, because he's just clearly anti-everything. People say like he's anti-establishment, but if you take the new Front Populaire altogether, they're just basically anti-everything, and they can't agree on anything amongst themselves either. So and for France, I don't think the picture is great. For Europe, and what's going to happen with Europe, I really don't know right now. It's too early to tell. The only thing I can say and see is that if you look at politics and data together, I don't think Europe is in a great situation right now. So I'm very reluctant to go and buy any euros on the back of this. Whether it would it not be that the dollar is a bit under pressure? That's the only thing.
Yeah, very much so. So it's I think we're going to have this undercurrent, but it's unless we get any big headlines from France on this stuff, the market's going to go back to trading data, be it Europe or the US, going back to trading the ECB, where we know they're very unlikely to hike in July, and it's all going to be about the potential for September. So, on the monetary policy front, it's not looking good already. I mean, this week is a bit of an exception because it's a very low data week, but as you can see, Vol's already dropping markedly. We're down low 5%, which hence why we've got a 41 pip range so far in euro dollar, even after coming through this French election stuff cable not doing that good either. 5.74. Dollar yen still up there, pretty much 9%. And we know the volatility is still in that one. So yeah, we'll see. We need a bit of a vol pickup, and maybe we'll get some of that this week as well. We do have this hurricane making landfall in Texas now, after coming across Mexico or up the coast of Mexico. So we need to continue to monitor the impact on that, particularly on oil markets. See if there's any big moves about that. But oil is pretty much taken in its stride at the moment. Seeing a bit of a softer numbers in oil coming down through 82.50, which is has been a bit of a level for quite some time, and it's coming through that pretty easily. So it looks like the market's done all its oil pricing over the storm, and now coming back to whatever else is going on. And lack of demand is probably going to reassert itself once again in oil markets. Now, Nomura has been throwing out its research about the new UK Labour Party. They say it sees near-term implications for markets as limited. They think that the Labour majority might embolden fiscal policy, i.e. might mean that Labour might have bolder fiscal policy making in government than its manifesto, i.e. keeping a tight rein on the purse strings and not stretching out too far. But we have to wait and see for that. They continue to look for the first rate cut from the Bank of England coming in August. We do have BOE members kicking it off from today, so we get to finally hear from those clowns and probably what happened at the June meeting and how close some of those were from flipping to a rate cut from keeping rates unchanged. So that's one thing to keep an eye on if you're trading the quid. Right, let's look at some of the prices. Sorry, Kane, have you got anything else you wanted to throw up?
No, mate. I mean, fine. Let's move on. Yeah, for the week ahead, I think tomorrow's Powell's testimony tomorrow and on Wednesday, that's going to be dissected once more. Every word will be important, at least for the initial move. And then, yeah, CPI later on this week. That's going to be it. What I'm going to pay attention to. But for the rest, no, you covered everything. No, nothing more to say right now. Quiet start to the week.
Yeah, and yeah, it can be quite a quiet one the week after NFP because we obviously get a ton of data during them. But we do a few bits and bobs. Wednesday morning, we get the RBNZ, also get some China CPI, PPI data there as well. But the RBNZ is announcing their latest monetary policy. No expectations really for this one. I don't think, Kate, it's just a big question of are they going to turn back some of their hawkish rhetoric that we've heard previously, or
the best we can expect is saying something different than last time. But no, there seems to be really zero reasons after the past couple of meetings for them to move anything. And again, never say never, but that one should be a pretty straightforward meeting. No changes, and copy paste the prior statement. But okay, I mean, in the bigger scheme of things, Kiwi is still a high yielder. It's a bit reluctant to make any more advance, but it's still a high yielder, and it's at 5.5% in the G10, G11 space. It's still looking kind of okay. And that's about it. And I'm really not expecting anything from the RBNZ this week.
No, so that one should pass by. But as Kay said, we always should be attentive to any change or any risk there. So if you're trading Kiwi, keep an eye on that one. Over on Thursday, we get that CPI data, a bit of data out from the UK monthly GDP and industrial production. But that US CPI is going to be the one. I haven't seen any expectations yet. I'll have a look at those. You got any through yet? I had a look yesterday.
Yeah, I read a couple of things, and so if you look at the expectations, is the headline CPI should come down. The core CPI is sticky,
There
and
we go.
I read a few expectations that core CPI could actually print at 3.5 again. They could come out just a tenth above expectations. That's what I've been reading. The calculators, the third digit behind the comma, and the roundings could be a tad higher, and yeah, so could still remain sticky. Could still be that message of higher for longer is back on the table. So yeah, that's likely going to be the mover of the week for the dollar.
Yeah. As you can see there, we've got some expectations up now, 3.1% for the headline from 3.3, core unchanged at 3.4. As Kay mentioned, some might have it going up a bit, 3.5. So it's going to be the main data.
Yeah, sorry to interrupt. I think Powell already may prepare the terrain. If he goes back to saying that, well, all right, that jobs report was really very good, meaning that he's still not ready, that may underpin the dollar already a little bit, and then the CPI, if it indeed would print 0.1 stronger, may mean that the dollar corrects. That's a possibility that we have to take into account this week. If of course we hear the opposite from Powell, and that he says like, well, I mean, it's now the job market is now changing because we are just above 4%, and that he feels a bit more confident, then this CPI may actually mean a little bit less than what is expected or the outcome of it.
Yeah, very much so. And then on Friday, we get the PPI data as well. So that can add or subtract a bit from what we get from CPI. It's a much more volatile number, US PPI, but often coming in quick succession from the CPI. As I say, it can just add to that picture there as well. And then we get the first Michigan numbers for July, flash numbers there. A little look into the consumer and those all important inflation expectations. So a bit of data to keep an eye on. Not an awful lot, but we'll have to be looking for inspiration elsewhere, I think, for some of the moves. But if it's going to be a quiet one, then range trading is going to be the way forward this week. So let's have a look at a few bits and bobs. Matthew was saying, there is. We've been talking about it. Other cracks or bigger cracks starting to appear in the economy. He's saying low-end consumer taking a strain, corporate starting to experience greater margin erosion. Yeah, that's been a bit of a squeeze factor coming in to some of Europe as well, seeing input costs still rising, output costs not being passed on as much. So, yeah, getting to that squeezy point, Matthew, regarding prices potentially. And then if people can't pay the prices, then you're going to see prices coming down, and that disinflation will pick up. Might even start to see some sort of deflationary type numbers where everything's looking negative, but we shall see on that. So, Ali, you've asked, will I short euro dollar at a first attempt at 109? Good question. It is an area of interest. It depends. I'm more bearish the dollar. So if I did hit something like 109s, it will purely be for maybe a bit of a scalp off the big figure, but it depends on what's driving it up here. Irrespective of what's gone on with French elections and bad Eurozone data and whatnot, this one is following what the dollar's doing. It's really the dollar in the driving seat of a lot of pairs at the moment. So I'm more likely to think about buying a dip than selling a rally at the moment. But as you say, the levels are there. 109 is a bit of a level, 109.40 is a bit of a level. You know, you can probably park it 20 pips every way up to 110. So it's just a question, as I said, what happens with the dollar over the next few days and weeks ahead. But we saw, as you saw, or as we saw, we had this little gap open this morning down here, just on the election stuff, but that didn't take long to close up, and we're back up here. As I said, 41, 42 pips range at the moment, so it's not doing an awful lot. It held the 108s, so that's a bit significant. We got down to 108.02, so that's okay. But can it move on from here and push up through the zone? That's going to be the question to look at for this one. Cable still doing okay. We've got a bit of risk, as I said, for pound this week with the BOE members. We've got one today, 2 on Wednesday, I think. I think it's a 10th when those two pop up. So we've got Haskell today, Peel and Mann on Wednesday. So it's going to be the first time they've spoken since the election campaign started. So they haven't really commented after the last BOE meeting. So it's going to be important to watch. We're holding the 128. That's really the important level on the downside. And then whatever it can do on the upside, 128.5, 129s. That's going to be where we need to watch on the upside. But for now, it's keeping this fairly decent move alive. Again, no reason to change it. Maybe we start to see a bit of flows out of France looking elsewhere. I've seen some stories where we might be getting an influx of French people, depending on what policies the left try to push through, higher taxes and all that sort of thing. So we might see a bit of exodus to the UK. Euro sterling, I'm still short in this one.
People.
More what, sorry?
More book people.
Well, this article I read, it commented when Hollande took over back then. It was a big left-leaning situation there, and UK became the new capital of France, apparently, with people jumping on the ferries and coming over. I wonder what will happen now due to Brexit, but that's a threat that they've been seeing. So we shall see. We might all be talking French in a few weeks, mates. Well, you know French anyway, so you can teach me.
All righty.
So yeah, Euro sterling. This little spike you've got here, you've probably got a few charts showing that. I don't think that spike is real. Some of the main trading platforms have a low about 84.39, where I've got broker lows around the 40s. So I think that was just an opening print when brokers are just coming online. But anyway, we opened a bit down. I have taken a bit off my short. I was short some at 61. Some at 84.95. I got out some at 51s just to take a bit off the table, as we didn't get any follow through this morning on those elections. But otherwise, we're still in this range. It's 85, it's 84s. Do what you like in between. Go with a break either side for the moment. My risk this week is these BOE members, if they are a bit dovish, although the market's pretty okay with the pricing at the moment for a potential cut coming in August. But if they're more dovish, highlight, they may get a couple of cuts, 3 cuts this year or something like that. Then we're going to likely see Euro sterling moving higher on the back of that. So I'll be keeping an eye on that this week. Just one more I'm in, and I'll pass it over to the K-Meister. Aussie Kiwi, just playing this purely off the techs. Up here into this 110 area. Again, a little bit of a spill on the open. I'm not sure how real that price is, but I've taken a little bit of profit off just sub 80, just to put some in the bank. Still happy to play this from the short side, but my risk is the RBNZ this week. If they're a little bit dovish, then this one is going to be going higher. Maybe if they're a little bit hawkish, then this one will be coming down a bit more. But yeah, I can't see much happening with this, but I'm happy still to play the techs up into 110, 110.50 and 111s, and then take it from there. K-Man, going to bounce it over to you, mate.
Okay. And I'm going to straight away get into what Michael was talking about, and that is gold. So as I was saying this morning as well, we saw a spike in gold, other metals into the end of the week. So there was a bit of a combination, obviously, with US yields coming down. But as we've seen, gold has had the tendency of late, of the past months as well, that when things heat up elsewhere, whether it be on political, geopolitical, it's acting now as a bit of a bit of a refuge for people to get in, and we've seen. So gold printed the high into the close on Friday. And now the weekend is gone. Weekend risk off. It's a little bit like you would trade options ahead of an event. FX options also have the tendency to build in uncertainty, so higher option vol into an event. Well, gold is taking over that role now. And as you rightly spotted that 63, 23.68, I said this morning like 65.70. That's the first little support here. Would already be okay if it holds. This is the prior high as well. So far it does, but it's like $4-5 high, $3-4 higher right now. We'll see what happens with the dollar, with those yields going forward. That is indeed the first little zone. I would argue, though, that the more important one now is going to be somewhere around that 23.50. Of course, the trend line is coming gradually down, so that level is not really that important. Would it not be that likely there's going to be stops below this trend line, if anything, which would then bring us more back down to low 23s. But in the meantime, for as long as this holds, I think it is relatively, or it is actually quite positive. I haven't added to anything, and unfortunately, I didn't think on Friday that we would actually come down $20. Otherwise, I would have taken some off, but I didn't. I'm long, but I have started to raise my stops now. Okay, to just below here, just below the 23.40 zone. If we get back down below here, I think we are going to mooch around again in this traffic zone. But by then, I'm not sure we are going to lose those extra $30 right now. We will see when the US comes back online what they want to do with it. But yes, in the very short term, this is the level that you identified as well. We are going to watch. If it goes through, perhaps we have that move down to 23.50s. If it holds, it would be extremely positive. And there's another one, which is the trading the other way around. If you look at the dollar side of things, that's dollar yen. So we had this spike higher back in April, which was met by interventions. Then we had a move through, coming to rest on it again, move back up, coming to rest on it again. And then we did our final move. Well, final, not going to call this a final move, but at least the final move for now. And then we had the move lower on Friday, the move lower back this morning in Asia, 160 and a quarter. I think it's pretty simple right now. Dollar yen, 160 and a quarter. That's your first zone of interest on the downside. If we would see a move below, yes, there is this 159.90, very close to 160. But if that would go, then I guess we may be in for a bit of a round of stops, perhaps, for those who are long. And I wouldn't be surprised if then we would trade closer to that 159 where we held last time and bounced off before doing the highs. Okay. First level here that coincides with that longer trend line is 161 and a quarter, 161 and a quarter here on Friday before. We came down 161 and a quarter, and we are trading in between. So I think this is quite simple right now on the dollar yen. What happened this morning, sorry though, is that we saw the rest of the dollars pretty much stalemate. Cable is still enjoying life in the meantime, but what's happening is the euro is the yen crosses again once more, and I can't repeat enough is that if you trade dollar yen, do watch those yen crosses. Because if you look at it this morning, dollar yen moved opposite, or yeah, quite opposite to all the rest of the dollars. Maybe give and take Swiss was like very undecided, up and down in the middle. But you just have to look at the yen crosses. They are still very, very big, you know. I'm on a too long time frame here, but you see a bit of retracement, and we are back towards the highs. You see the Kiwi yen as well. I mean, so if you trade dollar yen, to know really if you're good or not with one or the other directions, keep a very, very close eye on what's happening in those yen crosses, okay? Yeah, what's your next level on the cable, Ryan? Because I see a bit of stuff here around 128 and a quarter, 25.30. I've got a bit of a zone. Do you see that as well, or are you just looking at the high 128s and potentially 129? Or
Yeah, but if you go back to sort of March after that last spike to
here?
129, there was a
Oh
bit
yeah,
of
there it is.
resistance right after it. Otherwise, it's 128 and a half for me, 45, 50-ish.
Right. Okay. Yeah. This is the bigger move down that we saw. The 88.6 around here. I'm not a big fan of those, to be honest. But yeah, it's there, and we are trying to go and see if we can take it out. It looks again quite positive, the sterling. We will have to, of course, to wait what Haskell is saying. He's talking in about 3/4 of an hour. Okay, let's look at what happened in that Swiss then, because we saw the move lower. That started on Thursday. We came back, started to come back down into that second round of the French elections. But then again, you know, 96.70, 96.70, 96.70. We went like a few algo pips below. That must have that was really on the open again. But 96.70 euro Swiss is holding once more. So if for those who trading Swissy, I've always said, like, I mean, keep an eye on what's happening in Euro Swiss. Of course, you have the Euro side, which is on its own, but it's still the biggest trading partner. And then you can see that if this stabilizes, this Euro Swiss stabilizes, most of the time other pairs against the Swiss are also stabilizing. All right. Dollar Rand is trying to make up its mind around the bottom end of the triangle, but the more time that goes by and the more that we are crossing this bottom end of the triangle, the more I'm tempted to take it out and just really watch what's going on around 18 in the dollar rand. Not really any new, fresh, world-shocking news. Eskom, as expected, losing money, but that's a yearly thing. They are talking about a very, very big electricity investments over there. So that may be where the next move may come from in the rand, because imagine that investors say like, well, if you guys really want to make the best of it and try to get your things sorted out, I think don't recall the number, but it's a really, really, really big investment for electricity that they may be planning over there. If investors buy it, then we may have a bit of a surprise move in the rand, perhaps. But in the meantime, yep, 18, and then if we get back below here, of course, that would mean an acceleration. But for now, I'm just watching it and looking what kind of news comes out of South Africa. And for today, I guess that's good enough, Ryan. Back over to you.
Yeah, thank you very much, mate. Thanks for that. Yeah, we got. Should all know your levels by now, irrespective of we put on our chart. So yeah, pick your ranges. I think it's going to be one of those weeks this week where we see some ranges tested, trading between them, and see what else comes from the data and speakers. So have a great week, everybody. Thanks, K-Man, as always. Have a good one. Let's all speak French. Okay, I'll try and speak French tomorrow. I'm joking. Au revoir, everybody. See you later.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.